What is happening in real estate right now? There's so much chaos, there's so much ambiguity, nobody really knows the answer. So what I want to do is make sure that by the end of this video, you know how all of the recent news is impacting the real estate market, from the recently put out jobless claims statement today, as well as 0% mortgages, and how the stimulus relief bill is going to affect the market. I want to talk about, is 2008, 2009 possible again? What's happening with buyers, sellers, and investors? What is happening right now and what could potentially happen that's going to drastically affect the real estate market? So make sure you stay tuned. We're going to cover it all here, and make sure that you are starting to prepare for the situation ahead. This can be a blessing in disguise, because a lot of the agents that double down and put their foot on the gas right now while the rest are backing off the pedal are the ones that are going to come out the other side absolutely dominating it. So what I want to share with you is all of the updates, all of the news that's going to impact the United States as well as Canada, and how we can work together in order to get through everything I'm going to talk about and make sure that we come out the other end strong. So let's get straight into it, talk about all of the madness that's happening, and make sure that we work together to start dominating again.
Hey, so I push and I grind and I push and I grind, cause I know one day it's gonna pay y'all.
Alright guys, so it's no secret that a ton of news has been coming out. There's been so much dropping every single day. The stock market's going all over the place. People don't know what's happening in real estate. I've been a part of masterminds all over North America almost on a daily basis with agents talking and collaborating about what we can do. So I want to cover everything in one video to make sure that you are up to date with the latest and greatest, so that we can better inform our clients, and also from the investment perspective start to make the right decision. So all that I ask, I'm exhausted right now. As you can see, it's pitch black out, it's late at night. If you can just give me a little thumbs up, it would mean the world to me. I'm staying up, exhausting myself trying to get all this information out to you in a timely manner. So let's get straight to it. Let's first talk about the stimulus relief bill, and then we're going to get into the jobless claims statement, which is absolutely insane. We're going to talk about, could 2008, 2009 happen again? What's happening right now? This is going to blow your mind. What could happen and what you need to be prepared for. So looking at a couple things right here, stimulus relief bill, trillions of dollars funneled into the market. Okay, now what does that mean? Now, the first thing is that it could cause hyperinflation, and I've talked about what this can do in terms of the stock market and some of the opportunities there, but that's not necessarily good for the housing market, because again, as things start to slow down, but people have more spending power, that could actually have a negative impact on how things are going to go in the upcoming days. Now, with the jobless claims statement, this blew everybody's mind today. So let me give you a bit of an example of what's happening. Today it was released in the jobless claims statement that there's 3.3 million jobless claims that are accounted for. Now that's the secret word here, accounted for, because there's so many people and they're actually expecting that this could 10x. There's statements out there and articles out there saying that it could reach 30 million jobless claims. That's 30 million people filing for unemployment, which is absolutely insane. And I'll get into how that's going to affect the real estate market. But 3.3 million is actually 5 times greater than anything else we've seen in history. And that does not account for all the people unaccounted for. And what I mean by that is that there's currently a lot of people on a paid leave of absence. There's currently a lot of people that are temporarily laid off. So they're not necessarily jobless, but they don't also have a job. So you can expect to see this skyrocket over the next couple weeks as cases continue to climb. It was just announced today that the United States actually surpassed China in accounted for cases, which is pretty crazy considering their population as well as where it all started. So expect to see these numbers climb. Now, again, looking at the stimulus relief bill, funneling money into that, the problem is that they're coming up with the money out of thin air. They're simply printing this money, funneling trillions of dollars into the stock market. Now, it's not going to get like how it was in the Great Depression, where people are wheelbarrowing cash loads of money to go buy a loaf of bread. But if you understand money and you understand economy, you know that when trillions of dollars are just given to people and handed to people to spend, that usually doesn't have the most effective implications. If it was spent wisely, it would, but oftentimes that isn't the case. Now, could 2008, 2009 happen again? Let me break it down for you in terms of my perspective, what I think. I don't necessarily think that it's going to get to the point where 2008, 2009, absolute market crash, recession, complete demolition happens. Now, the reason why I'm saying that is back in 2008, 2009, it was a different situation in terms of equity. Now, the problem with 2008, 2009 recession was the fact that there was no equity in these homes. You had people that were working at the grocery store that had 5 rental properties back in 2008, 2009. They could not afford it. They had no equity. And that's where the housing market collapsed, basically, because people all went into foreclosure. The bank took over everything because people were just getting these lengthy mortgages that they simply could not afford, but they were actually allowed to get. Now, the situation in today's date, in March of 2020, is the fact that obviously the qualifications have changed. But if you buy your property between 2012 and 2016, right now, it seems like because of the appreciation and the bullish aspect of the market in the United States over the last while, people have more equity in their homes. So if it gets to the point where people are going to be going into foreclosure, or if, the market really does tank and we do end up going into a recession, the larger majority of people are going to have enough equity in their properties in order to sell it even at a fire sale rate and still get off without having to go into foreclosure and losing their shirt or their credit. So I think we're in a better position right now. Of course, things can change, but I simply do truly believe that we aren't ever going to get to that point again, just because I think we've learned our lesson for the most part. Now, it's not going to be a pretty picture, which I'm going to get into right now, but what's happening, but it is going to be better, and I don't foresee it collapsing like it did back then. Now, what is happening now? Evidently, from the obvious, no showings, no open houses, things like that, because a lot of brokerages and cities are actually mandating that is the case, that you cannot have open houses, you can't be showing properties. So obviously what's happening from that, from a buyer, sellers, and investors perspective, is that deals are actually collapsing. Title owners aren't working. There's a lot of stuff going on, and deals are allowed to collapse right now with zero repercussions because of what's happening with the pandemic. Also, with investors, another crazy situation is the fact that a lot of people that were funneling money into multifamily properties, commercial real estate, or simply flipping properties and the like, a lot of these people had their money tied up in the stock market. So when they were in escrow, or when they were in with the lawyers and had the deals ready to go, and the stock market plummeted over the course of a couple days, a lot of these people lost their payments and their down payments that they were going to pull out and use for investing in real estate. So you're not only seeing buyers shy away from looking at properties because their city is actually stating that they can't, you're seeing sellers not want to list, obviously, because there's no buyers. And now you're seeing investors pull out or be forced to pull out and drop deals because of the fact that they simply don't have the capital that they otherwise had. Now, another thing that's pretty crazy that's happening right now is the fact that landlords actually can't evict people. There was a statement put out and a mandate again, the fact that because of the current situation of the pandemic and the crisis, that landlords can't evict people, which is, hopefully with the stimulus relief bill, which is giving up to, I think, $3,000 to families of 4, that this is going to help people make payments during this time. Again, if they don't just throw this cash away into stuff that they shouldn't be, which unfortunately does happen from time to time. In situations where people aren't paying landlords and landlords can't evict, there's a lot of trouble there that's brewing. And I truly believe that this is just the beginning of the news that we're going to see about what's happening with large-scale multifamily rental properties. Now let's talk about the 0% mortgages. This is something that came out today, and I believe it's supposed to be passed tomorrow. And it's pretty insane because, again, you have to be wary about how you approach things like this. Yes, on paper and theoretically, 0% mortgage sounds pretty great. Now, let me break down the inner workings with this. If it's a property that's under 4 units, so a typical single family or a small scale triplex, fourplex, duplex, anything of the like, you can actually defer your payments for up to 120 days. Now, the crazy thing is in order to be accepted as an applicant for that, you simply have to affirm that you were impacted by this situation and the crisis at hand. You don't actually have to provide any documentation. You simply just have to affirm, which means that you simply just have to state that this impacted you. Now, I know this has impacted the majority of people, but you can also see a situation where this is going to be taken for granted by a lot of people. Now, another interesting aspect of what's coming out is the fact that it states that you can defer your payments for 120 days, but after those 120 days, if you confirm that you still can't make your payments, you can defer it for another 120 days. So 240 days, that's 8 months. Now, you do obviously have to pay for it at some point, but you can start to see here, if your wheels are spinning, that this could land some people in trouble if they continue to defer their payments and there's still an influx of millions of jobless people. And now we're in a situation where there could be some trouble. So now let's talk about my predictions for what's going to happen in the future. The good, the bad, the ugly. In terms of the bad, I do foresee there being an increase in foreclosures and pre-foreclosures, of course. I also see, again, longer days on market, obviously, because I think we're just seeing the tip of the iceberg. In terms of the cases that we're seeing, I think there's a lot of untold stories. There's a lot of untold statements that are yet to come from the government as well as local markets. So I think that this is going to have a long-lasting impact. Now, I do believe that we are going to recover from this, but you can't expect this to be a 6, 9, 12-month ordeal in order to get back to where the market was. There's going to be a lot of speculation. There's going to be a lot of people very hesitant and in uncertain positions as buyers, investors, and sellers in terms of if they can afford to sell at the current prices, if they can buy with the money that they have left, or if they have jobs by that time, if investors have recouped their capital from the market, if they've been investing at this time strategically, or if they've had to find other avenues to get their money. So I think it's going to be slow to increase. I also see right now, and this is happening, a lot of traditional smaller brick and mortar brokerages are having to close their doors. Their agents can't work, their agents aren't paying them, they're not being able to make up for the lost funds, and they're closing, which is why you're seeing a lot of people going to more modern brokerages at this current period of time. Now, in terms of the good, it's a good opportunity for real estate agents to get creative and build top of mind brand awareness. I've talked about this in a lot of videos and I'll link it in the card above right here. But I do think from an agent perspective, this is a good time to separate yourself from the pack. I think there's a lot of opportunity with the quarantine for you to reflect on how you're doing business, build your brand, learn marketing strategies. So you can use this time to start to warm up cold audiences. So from a realtor's perspective, I think there's a lot of great things you can be doing right now to harvest your crop and grow your brand and grow your business so you build momentum so that whenever we come out on the other end of this, you're in a position to start to scale. Now, in terms of the housing market, the good, again, I honestly just believe that it's too early to say. I think there is going to be opportunities for buyers on the other end. There's going to be some fire sales for investors, but in terms of the general buyer and seller, I think we still have to wait and see what's going to happen. But you can see that the stimulus relief bill is something that I know is trying to help the economy, but I think there can be some repercussions by printing trillions of dollars. The jobless claims is just getting started. I think, again, people are speculating it could 10x to 30 million people jobless when the workforce is something like 100 million, which is pretty detrimental. And then, but again, I don't think 2008, 2009 is going to happen. I really want your opinion. So please drop a comment below and let me know what you think's happening or what's happening in your market. We've been doing, again, frequent free masterminds. If you do want to join us to talk about some creative strategies we're using at this time in order to still build momentum and still grow as an agent. But I really want to know what's happening in your market and how you're going through this time in a positive way. So I'm going to continue to put out videos whenever new relevant news comes out because I do want to educate you. I do want us to work together to get through this time, but right now it's not painting the prettiest picture. But anyways, there you have it. Please make sure you like, comment, subscribe if you already haven't, and we'll see you in the next video.